I promised you we're going to focus on AI today. It's going to be a deep dive on AI. Gary, you produced a 34-page book that I think is an amazing head start. You say this is not a shortcut. If you're looking to skip the hard work of investing, close this now and buy an index fund. This framework is for long-term investors who want to be more thorough, not less disciplined. Can you talk about that? I love that quote.
I mean, look, there's two extremes. Like there's kind of the Luddite version of like AI is impure. It's going to like pollute your process, going to make you make mistakes, it hallucinates and all that. I'm sure we'll get into that. And then there's the other, I would say equally misguided extreme, which is it's like a magic genie. If you need a magic lamp, comes out and you like ask it, AI Genie, give me the stocks that will work tomorrow. You buy them and you make a lot of money, and then you brag about it on Twitter or X or whatever, right? Neither I think of those are true, and so I think it's important to set expectations that like you still have to do a lot of hard work. You can just get a lot more of that work more efficiently done, at least in certain parts of your process. It's a useful tool where you have to actually, it forces you, right, to look deeply inside your own investment process and say, what are my systems? What are my frameworks? What of that, where do I add the most value? And where is there the most nuanced judgment, right? And where there's like just, hey, this can easily be replaced by a machine with the caveat, and this is important, but the caveat that you stay kind of on the loop and you actually check what the machine is giving it.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on this show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. You know how researching a company can take forever, digging through filings, transcripts, and reports trying to make sense of it all? That's where Tenzing Memo comes in. It's an AI-powered market intelligence platform that helps you research public companies in minutes instead of days. Created by stock analysts for stock analysts, people who love the treasure hunt of investing. I spent over 20 years investing professionally, and when I started using Memo, it immediately became part of my process. It surfaced new ideas, helped me spot insights on stocks I held for years, and connected data points I'd completely missed. It's fast, intuitive, and gives you a research superpower. Tenzing sponsored this episode to help us make Talking Billions better for you. Use code BILLIONS at sign up for an extended trial and 10% off. Check out Tenzing Memo today. My guest today is Gary Mishuris, CFA, Managing Partner and Chief Investment Officer of Silver Ring Value Partners, an MIT-trained investor who combines computer science precision with economic wisdom to practice intrinsic value investing. With 2 decades of experience spanning Fidelity, Evergreen, Manulife, before founding his own firm, Gary brings a unique perspective shaped by his immigrant journey from the Soviet Union and his commitment to behavioral discipline in investing. He's also a sought-after teacher and author of the Behavioral Value Investor newsletter, where he explores the intersection of rigorous analysis, market psychology, and emerging AI tools in the investment process. Gary, how are you? So nice to see you again.
Good. Well, thank you for having me again. And after that introduction, I better deliver. Otherwise, I'm going to be in trouble, huh?
But it's all true. And there are so many different directions we can take it to. But I promised you we're going to focus on AI today. It's going to be a deep dive on AI for the benefit of the audience. A couple of announcements. One, find Gary's episode from, I think it was last year. Wonderful conversation. So you're going to have a head start here. Second thing, if you're not driving, if you're not hiking, pull up Gary's book about AI prompts. That will be in the notes to this episode. And if you are outside of your home, look it up when you get home. But it will help you follow along with our conversation today. Gary, you produced a 34-page book that I think is an amazing head start for a lot of people. I want to start with a quote from the book. You say, "This is not a shortcut. If you're looking to skip the hard work of investing, close this now and buy an index fund. This framework is for long-term investors who want to be more thorough, not less disciplined." Can you talk about that? I love that quote.
Yeah, no, absolutely. I mean, I think, listen, there are a lot of people out there that think that, look, there's two extremes. Like, there's kind of the Luddite version of like, AI is impure. It's going to like pollute your process, going to make you make mistakes, it hallucinates and all that. I'm sure we'll get into that. And then there's the other, I would say, equally misguided extreme, which is, hey, you got, it's like a magic genie, genie in a magic lamp comes out and you like ask it, AI genie, give me the stocks that will work tomorrow. You buy them and you make a lot of money, and then, you brag about it on Twitter or X or whatever, right? Neither I think of those are true. And so I think it's important to set expectations that like you still have to do a lot of hard work. You can just get a lot more of that work more efficiently done, at least in certain parts of your process.
You write in your Substack about your experience with AI, which is really eye-opening. And you've been sharing on LinkedIn different prompts and discussions of what you're doing. It took you months, hundreds of hours. Can you talk about some aha moments during that journey, what you found when you found something that works, and maybe when you found something that could work but actually completely failed you?
Yeah, well, let me zoom out a little first. I mean, I kind of, I was thinking about this conversation. I was thinking about like how to frame AI. And it brings me back to my first year at Fidelity, about 25 years ago when I was a young analyst. And there was this grizzled veteran value portfolio manager. And he insisted on using kind of a yellow legal notepad to do his modeling on calls. And, we all thought he was like pretty hardcore.
Yeah.
But we also thought he was a little crazy to do that because it's like, hey, like you have Microsoft Excel, right?
Yeah.
You don't need to like be hardcore. It's like if you have a calculator, but you using an abacus, right? So, and we'll get into it. The calculator doesn't give you an advantage, but insisting on using an abacus or insisting on using, a yellow legal pad, instead of Microsoft Excel for like the rote basic tasks, I think gives you a big disadvantage, like in terms of things. So I think, the way I like to frame AI is it's a useful tool where you have to, actually it forces you, right, to look deeply inside your own investment process and say, what are my systems? What are my frameworks? What of that, where do I add the most value and where is there the most nuanced judgment, right? And where there's like just, hey, this can easily be replaced by a machine with the caveat, and this is important, but the caveat that you stay kind of on the loop and you actually check what the machine is giving you. And maybe this will change, right? Maybe like, hey, 3 years from now, 5 years from now, some number of years in the future, like, I don't know, when Elon Musk, has the robotic army going and all that stuff, we're going to have the Genie in the AI version, but we're definitely not there yet. And I think that using the fact that AI is imperfect, which for sure it's imperfect, but using it as a reason not to use it is a mistake. You just have to be very careful of how you build that in to your process. And we can certainly, I'll let you take that into any direction you want to go.
I have a story about a legal pad. So when I started years ago at a New York investment firm, I had a fascination with new software, and I would bring people to show us what they have. And as you can imagine, at an older investment firm, you have 20-year-olds working, and you have 80-year-olds that still come with their Wall Street Journal and a coffee and a muffin in the morning and a bagel.
Sure.
And some of us were more open, some of us less so. But I remember that bringing a new piece of software was not well received by everybody. And I had somebody rush to my desk first thing in the morning, asking me, who do I think I am? And I thought, you have to elaborate on the question. Yeah. And they basically, that individual told me he's not going to change the way he's doing things. And he said, what do you think you can do with this that I couldn't do with a legal pad and a pencil when I was your age, half a century ago? And I said, well, probably nothing, but I can do it in a fraction of the time.
Right. Exactly.
Which is okay, but if I'm not going to do that, I can promise you that our competition will do it. And they'll look at more ideas, they'll turn more stones, and this will enhance their investment process. And this was nothing compared to what AI is doing. I'll mention one more thing. I feel like I saw very gradual change in what's available to us in the investment profession over maybe 16, 17 years of my career. And in the last 5, 6 years, and especially the last two or so, the number of things that showed up is just incredible. Different tools, the ones we're going to talk about, and other ones. I'm humbled. I don't know, overwhelmed sometimes, but I'm very open to learning. I don't want to be the one telling another 20-year-old, I'm 45 now, get a legal pad and do it all by hand.
Right. Well, we gotta be careful, right? We're not AI natives. I don't know if that's a thing yet, but how they used to talk about digital natives and the young kids, So we're not necessarily AI natives. There was actually a fairly well-known AI engineer on LinkedIn, Andrew Ng, talking about how he hires computer science, people, engineers and coders, and he's like, I just have more luck with young kids out of school because they're just so more used to they started with this technology as opposed to retraining kind of old, really good engineers who are maybe stubborn and just don't want to change their ways. So I think, I don't know about your age, you look young yet wise in your experience, but my gray hair at 46, I want to make sure I properly explore the technology and don't become a dinosaur essentially.
Well, I think we're just a year apart. I'm 45, so
there you go.
But I still remember how to do things, by hand. I know how to look up things, and we'll talk more about it. I feel like that, as much as I'm a fan of what's coming, I don't think we should lose that skill. You say something that really struck a chord with me. You said not using AI at all is increasingly likely to lead to a disadvantage, which is a huge statement, and I can't disagree. I agree with you. But it's one of those things where, just like the individual I described, staying with the legal pad, if you continue on that course, somebody will eat your lunch. Can you talk about that idea?
Well, think of, listen, I'm an MIT guy by training, right? So, I don't, at the risk of sounding kind of like a total nerd, you kind of want to think about it as a formula a little bit. If you think about the investing process, as quantity of ideas you look at, times or some kind of a quality quotient of how well you look at each idea, and then at the end multiply by some judgment, right, of what you do with the outcome of the research process in terms of actual actions, investing decisions, right? That's kind of the basic kind of the ways to add value. So what can you do better, right? You can look at more ideas, you can look at each idea better, and you can exercise better final judgment, right? Or what to do with that, the outcome of the research process into the portfolio management process. Those are the kind of, let's say, the three broad kind of knobs you can kind of turn, right? And so I think that the danger again is to try to get AI to improve that last step, the judgment. Although there are ways, and we'll talk about them, and I think there are more behavioral ways. Not so much that AI is going to tell you magically which stock will go up next quarter, but more ways that AI can save you from your own biases and mistakes. But I think the simplest win is just increasing that first variable, right? It's basically taking the quantity of ideas you can look at without sacrificing quality, which is important, and just dialing that way up, right? And I think, that is super valuable, because if you can just achieve that, if those three factors, like looking, Peter Lynch used to talk about turning over more rocks, right? If you can turn over more rocks because you're using AI, that, or conversely, if you're not doing that, but other people are, at the end of the day, value add is a zero-sum game, right? Negative-sum game, if you will. And, you are going to lose out to people who are doing it better. So the one, like I would say, the big framework I would like to think of is, think about your investing process as a funnel, right? You have presumably everyone's gonna have a wider aperture at the top, right? Than at the bottom. No, I don't know anyone who buys every single thing they look at. Oh, okay, maybe there's some PMs that do, but most people have more things they consider than they ultimately act on, right? So you're gonna have some, top of funnel, right? Some mid funnel and some bottom of funnel activities in your process. And that will vary, like you're being the listener, or you're being you'll be different, right? Than mine. That's fine. You should all have your own process. When I teach at Babson and I teach my students how to build their own investment process, I always tell them, don't be a shadow of someone else. Be, a best version of yourself. Build your own process that plays to your strengths and not to someone else's. So bring it back to AI. So the top of funnel is the easiest place to bring AI in, because the mistakes are much more forgiving, right? Now, like, let's think about it. Like, what does it mean? Let's be concrete here. So idea generation, that's, the very top of almost any funnel, I think, right? So let's say you generate 100 candidates using AI. Let's use this extreme example. Let's say 90% of them are garbage, right? But let's say you have a way of quickly going down that list of 100 and picking out the 10 that aren't garbage, right? That are worth pursuing. So you don't actually care that it has a 90% error rate. It doesn't matter. What matters is, did you get 10 ideas of good quality for consideration? Which doesn't mean they're buys. It's just ideas. They're candidates. That's why there's the rest of the process, right? But did you get useful incremental ideas in a short amount of time that you wouldn't have otherwise? So I think having the right metrics, what is success, should not be defined purely by an error rate or how often something hallucinates or anything like that. It's how useful can you make it in your research process. That's, I think, the key.
I like this idea of zooming out to zoom in. And it's both at the level that you described, that I could expand my arms and look at more stocks. That's one thing. And then individual stock, I'd like to know everything there is to know about a stock, and I can't possibly. But with the tools that are out there, you could look at 10 annual reports and years worth of quarterly earnings and transcripts. And I do that these days at that level as well. And then I find one earnings call where I feel like there's a change. It's a nuanced change. And it gets to the point that I pull up the audio and I listen to the way the CEO explains something. I want to hear them tell me. Because a transcript is kind of flat to me. You can say the word thank you in 10 different ways, right? You mean it, you don't mean it. You wish you didn't have to say it. You're glad you're saying it. So I want to hear the way they say it. And I think people like podcasts because they want to hear the human voice and the human experience. So I do that. So I zoom out, and then I find this one quarter where I see, I think the margins are about to turn. And I want to hear them tell me exactly what's going on. So I think it allows us to both look at more ideas, but also look at ideas that we might even have in the portfolio in a way that maybe was not feasible before. So that's a fascinating revelation for me. I'm curious about temperament, and you write about it. I think we both agree that it's an important quality. Do you think that we have here, tools and temperament? Do you think temperament is still a dominant advantage that we have that AI will not take away, or is there a way for a less experienced investor to gain advantage with the tools and override it in some way?
Yeah. Well, so I was talking to a group of students, not at Babson, another professor actually at California University asked me to talk to his students, and in my slide deck, I like to compare investing to dieting, right? And I have the slide, we don't have presentation up on the screen, but it would be like, healthy food, exercise, this young lady with a flat tummy walking around having done all those things. And that's kind of like, we know that's what it should be like, right? That's how we should be doing that. And then the next slide is this big fat guy eating a donut, So, and that's the reality, right? So the reality is not that we don't know what it means to be disciplined in investing. It's just as hard. We're human. And I think the worst thing you can do is have a big disconnect between the way things are and the way you perceive them to be. Meaning, like, if you realize that, hey, I have trouble staying away from donuts if, they're around me, right? Then, like, rather than test your willpower every day, you might just get rid of all the donuts and just not have any in the house, right? Simple kind of hack, so to speak, right? But so investing is similar, right? You can have all the processes in the world, but if you can't actually execute them, especially under pressure, especially when things are not going well or the markets are in a tumultuous state, you're going to be like the guy with the donut, like knowing what you should do, but eating a donut, right? And so temperament is super important. And like the only way I know of, like, now you can do the Odysseus, right, method, which is you tie yourself to the mast, meaning you say, okay, I know I don't have temperament, so I'm going to not give myself the freedom to make the mistakes. I'm going to program a computer to do the trades for me. And that's a path. That's not my path, despite my MIT background, but I understand that. And actually, complete tangent, but having read Jim Simmons' book, like I remember there were a couple of points in that Renaissance Evolution where, like at market inflection points, where he like turned off the computer and said something is wrong. I have to override it because like, and that's good and bad. The good is it probably saved him, but bad is like, well, if you only listen to the computer when you feel you agree with it, then it's not the same as tying yourself to the mast to avoid the siren call. That Odysseus did. So I think the key, what does temperament mean? I mean, temperament mean that is that you are able to stick close to your A game or your process under pressure, right? But we all deviate. No one has perfect temperament, right? No one is going to say, I am, Commander Data, or I'm Spock from Star Trek, and I'm going to be completely impervious to any outside stimuli. That's just not realistic. But good temperament investing means that you might get emotionally affected, but you have some buffer in your process and your systems that prevents you from having that emotional impact translate into different decisions that you would do otherwise. Or it means that you're able to cope with that stimuli in some way in your process to then still reach good decisions, right, under pressure. Not perfect. You're going to make mistakes. I know I'm going to make mistakes for sure. But I mean, I have some friends where, when they have a stretch of bad performance, they completely fall apart. They doubt themselves. They kind of hide under the desk and proverbially cry. And I have some people who are just super resilient, and they are like, okay, they kind of maybe shut down and they're not like super in a good mood, but they are plowing through tough times to get to the other side. And I think I don't know how to teach how you be the latter and not the former.
It's about believing in yourself. I fly small planes, and I had an instructor who told me that there's one thing you don't want to do, and I brought it up in a conversation or two on this podcast too. You don't want to undermine the confidence of a pilot, especially a young pilot. And he told me, he was learning to fly at some point, and there might have been very capable pilots, but if something happened to them or somebody said something to them that permanently damaged their confidence, it was better for them not to get back inside that plane. And I think that's extreme in flying because you don't have to be up in the air and you can really hurt yourself, right? We know that.
Yeah.
But in investing, there are moments where if something undermines your confidence or somebody undermines your confidence, it's a very dangerous territory. When I'm thinking of temperament, and you talk about different guardrails, I personally don't like trading, and I met a lot of investors that don't like to trade. And some people told me that they get sick in their stomach when they have to trade anything in their portfolio. They love the research. At best, they like buying, but they don't like the experience of trading, which is fascinating because a lot of people come to investing for all the wrong reasons because they love the action and the activity.
Right.
But the ones that stick around I actually don't do much. I manage money for families, very long-term patient capital. A lot of the positions I've held for a long time, and there is a lot of inaction in what I try to do. And I'm sure you would agree that the creation of value takes time, and businesses take time to come back.
Absolutely.
You write about the devil's advocate experiment, which is something that I've seen people try to do. And I know you share that you tried to do it with other investors, but it wasn't a successful endeavor. But with AI, you can have AI with one of the prompts in the document that I was referencing before, and I hope this audience will look up. You talk about asking AI to basically poke holes in what you like, negative outlook, negative ideas about the business. Why are you bearish? Forcing a bearish case for the business. Can you talk about the benefit? I think we can fall in love with an idea and almost have a huge blind spot, not considering what can go wrong.
Yeah, you can totally have you can totally have a blind spot and just not be even aware of it, right? It's not like, oh, I'm not sure about this. You can just not even be asking the right questions. So, I think the experiment you're referring to is I got an experienced group, 5, 6 of us, and the deal was, hey, let's do every couple of weeks, not every couple of weeks. Everyone will get 2 or so idea weeks if they're requested to do devil's advocate, and everyone can ask for it once a year. So like it's reasonable, right? And the idea was that you want to make sure that you have, someone who you respect, who is going to look at the facts and come up with the strongest possible opposite point of view. Not just like on the one hand, on the other, a balanced approach, but, opposite. And it worked a couple of times. It was better than nothing. But listen, we're all human, and people just were busy, and some people said, yes, I'm going to do it, and then they didn't do it, or some people did it, and it was very clear that they did a very rushed job, and they didn't really, I didn't really kind of do anything useful. They kind of just wanted to check the box, again, not because they were bad people, but because, life got in the way. So I think AI is perfect at this. Not perfect. No one is perfect, but it's a very good tool for this. And there's 2 ways you can use it for this. So one is you can write up your own investment report, presentation, whatever, and just ask AI to look for logical flaws, like mistakes of commission or omission. So literally, so I don't know how much our listeners know about how AI works, but there's something called the context window. And the context window is AI's, or a large language model, is basically what it knows, right? What does it know about the world? And, a lot of times you basically have all this training data, right? And then you have you add your stuff into the context window, and those 2 interact, and that's how AI generates its answer. So one way you can actually literally go to, Google has a free tool called NotebookLM, and the beauty of NotebookLM is that 2 things. One is it can accept 300 sources, which could be YouTube videos, could be your PDFs, could be web links, pretty much anything. And so 300 sources is a lot. Number 2 is the only thing it considers and knows is what you tell it to know. So it's like, imagine having like a blank slate. And so for this use case, you can literally have just your report be the knowledge, that it has. And with that information in mind, without any kind of outside knowledge about the company, you can tell you, well, are there any logical inconsistencies, right? Is there anything that's missing? Like you stipulated you're going to demonstrate A, B, and C. Maybe you demonstrated A, but you didn't quite show B or C, things like that. So that's one use case, kind of checking. By the way, you can use it on other people. It's a lot. Trust me, it's a lot more fun on using on other people's reports than on your own. I think you can understand why, right? Because we're perfect, right? It's the other guys. It's like, hey, the other guy is the one that's not that great. Our work is awesome. But for instance, you could even take a sell-side report, right? If you want to quickly look at that. I don't read a lot of these, but let's say you do. Like an initiation report, and you can see what's missing, what the bias is, and so forth. Use case number 2 is not restricting it, using a different, not NotebookLM, but using a more standard LLM. And literally it's prompting it correctly. And I think prompting is important. I think it's not the most important, but it still is important. That's why I think you guys, if you're interested, should look at the AI Equity Analyst PDF they published, because it'll help you have the right prompts, because I'm sure we'll talk about it. But I've tested these. Sometimes prompts make a big difference. But I think the more important thing than the specific prompt is asking AI the right questions and having the right use cases, because prompts will change, right? In a year, a different prompt will be better, So prompts will evolve. The prompts I have in there, I've tested, and I believe they work right now. At least they work for me pretty well. But it's a living, breathing thing that I'm going to update over time and my own usage. But I think the other devil's advocate is you literally tell it to search out, all information out there, pay particular attention to credible negative information, and come up with the strongest possible opposite case of your investment thesis. And by the way, you can do it two ways. You can do it as a last step in your process before pulling the trigger. I think that's a good use case, and I do it. You can also do it kind of mid-funnel. Let's say you've done some work, you think the idea is promising, and now you are deciding whether you want to commit additional time and resources to pursuing this idea. You can do it at that point as well, because you might unearth things that you will find they're like, ooh, this is not the type of question I want to answer. But, as a very quick aside, just as a teachable moment, I always tell my students, listen, imagine a multiple choice test where you get no penalty for passing. What would your strategy be on that test? Well, most of them say, well, I would just answer the questions I'm very, very, very sure of. Exactly, right? So you don't need to, so in investing, you get to choose which questions you answer. And so this mid-funnel approach of using the devil's advocate to unearth problems early on to save yourself the time is another way you can basically improve your time usage and kill ideas quickly. Because what I found personally is I used to kill too many ideas very early. It's an auto parts supplier. I don't want auto parts suppliers because they have big customers, they're powerful. That's not always wrong, but it's a very close-minded kind of biased way of looking at the universe. I think it's better to have a very wide top of funnel and a very robust early many kind of stages where you have kill points to kill the idea along the way, so that you consider many things, or not anything, but a very broad set of choices briefly, but dedicate depth to relatively few. And that's where I think AI excels.
It's fascinating what you describe, because it adds this new superpower within the process that we never had. And I want to emphasize how much value I get from poking holes in my own investment cases. And I find it easier to write it down, put it in the drawer, so to speak, and come back to it and look at it with fresh eyes and find what's wrong with it. And obviously AI has, and your prompts are very helpful to find and poke holes and maybe do a little bit more research before you commit to an idea. And I think there's a range between I want to buy a stock, I don't have an opinion about a stock, and I would short a stock. And I'm sure there are other steps within, right? So just because I can be a very good devil's advocate for your investment case, it doesn't mean that I would go ahead and short it. I just have enough of my own personal, biases and beliefs and experience not to buy it. But I think having somebody that really goes deep, like AI could, and question your idea can add a lot of value to the process. I really like that point.
I was summoned to jury duty yesterday. Luckily, I didn't get one. But fortunately for us enjoying this conversation together, I didn't get chosen. But the judge reminded me, and all of us in the jury pool, how it's a reason. There's a criminal case being considered, and how you have to decide, whether someone is guilty or beyond a reasonable doubt. It's not doesn't say beyond all doubt, right? And so I think by having AI to kind of, bring that framework to investing, can it quickly unearth reasonable doubt that, would make you, no matter almost what else you learn about the business down the road, it would make you say, I don't need to do this. I can look at something else instead.
Being on jury duty is a huge ask. But
Yeah, well, yeah, many years ago, like a decade ago, I was in a grand jury for 3 months. So that was definitely a life learning experience, but not good for my ability to get work done. But
no,
having done it, I think I'm a better person, but I wouldn't want to do it again necessarily.
it's definitely, has its lessons. You talk about certain, categories in terms of experience with AI. We talked about saving time, and I think that's one layer. And then you talk about the fact that AI can do things that humans cannot, or can do it better than humans. Can you explain how you look at those things? Because the first initial impression that we have, I had so much to do. I don't have to do it. AI will do it. And then there are certain things that even I don't think I could do, but AI can.
Yeah, absolutely. I think well, I call it category one, which is saving resources, and most of the time that means saving time. And category two, which means that I'm now not just saving time, but doing something you couldn't do even if you had quite a bit of time, right? I think right now, for me, most category two use cases are elusive. And I don't know. And by the way, like I'm not trying to position myself as the world's best expert on AI. I think it's the wild, wild west. I think the most important thing you can do is get your hands dirty, engage with it, start building it into your process, iterate, and get better, and grow with it as AI grows and gets better. It's not that someone, by the way, just because I'm not the world's biggest expert, I don't think there is a world's biggest expert. Like, I mean, it doesn't matter if whoever, people just haven't figured this out yet. It's a kind of an open domain, right? And so I think that when are there possible use cases right now where the category two they're missing? There's a good chance. And I'm hoping, by the way, one of my selfish hopes is in doing some of this work and sharing it kind of with the public. Some of you might write and say, "Hey, Gary, I listened to your podcast, to your conversation, and here's how I use it. And by the way, it's way better than the way you use it." And I'd be like, "Awesome!" That I would please write with me and tell me that because I'm looking to improve and I definitely don't have all the answers. With that in mind, I think one use case that's kind of in the category two, maybe it's 1.5, I don't know, is I think AI is really good at synthesizing information and finding connections between pieces of data much better than the human mind. So again, I think as I talk about in my kind of guide, most of the time I found Gemini 2.5 Pro being kind of the best engine for most of these prompts. And I have not done scientific testing, but rigorous anecdotal testing is how I describe it. But in the context of this task, I think NotebookLM is much better. And let's say you have access to a library of expert interview transcripts, right? And I think many of us do. It depends. If you're a retail investor and you're listening to this, you might not. But you could still. It's not prohibitively expensive, depending on how much money you're investing. And you have a company with quite a few of these interviews: customers, former employees, and suppliers, and so forth, competitors. You can throw them into NotebookLM, and you can ask it to look for patterns. And patterns like, where do the experts agree the most about the company? Where do the experts disagree? And one particular question I found kind of clever, and maybe this is just me patting myself on the back too much, but it's going back to your point about, the tone of voice matters, asking AI, find what is not being said or what is being said between the lines.
Yes.
And let me give you an example of what I mean. Like, let's say you are you're doing an interview with a former employee and you ask them, "Hey, how good was the culture?" Well, and let's say the answer comes back as something, "Hey, I really enjoy going out for beer with the guys after work." And that seems like, if you're not careful, you might move on. It's like, yeah, likes his buddies, goes out for beer with them, awesome, good culture, right? But he didn't say that, or she didn't say that. And when I was at Fidelity, they brought former CIA interrogators to teach us how to conduct interviews, right? And one of the things that really stuck with me from that experience is that people typically don't lie in answer to questions. They just answer a slightly different question truthfully, right? So, so that example I just gave, which is made up example, but that example might be of a person who's trying to hide that he doesn't like the culture, but he just doesn't want to go on the record, even if it's anonymous. Who know? He doesn't know for sure if it'll leak out. Even if he's a former employee, he doesn't want to hurt his chances for getting another job. And he is not answering a question really. He's answering a different question. It's true, perhaps, that he went for beer with his coworkers, but it might be to complain about the toxic culture in the workplace. I mean, I don't know, right? And so I think AI is really good at picking some of these things up. I've used it a couple of times in some companies. You do need to have a decent density of transcripts. So if it's some small cap with 3 transcripts over the last, 2 years, you might not get much out of it. But if it's something where there's 20, 30 plus transcripts, you have a higher chance of finding something. Again, this is when you're doing a little bit more depth work and you've already committed to this being a high likelihood of being a good investment. That's why you're doing this kind of analysis. But I think it can pick things up. The other thing you can look at is how have things changed, over time, right? How, you can download maybe, a gazillion quarterly earnings transcripts and look for how has management tone changed, or what have they changed their kind of, the way they talk about this. So like looking at change over time in a very quick way, both saves time and sometimes would probably find something that you or I, perhaps I, would miss.
And it's something I've done. I actually took advantage of the tools that are out there. I mentioned to you that I use Tenzing Memo, and I've been using it for a while, and they approached me at some point to sponsor this show, and I'm grateful for it. It helps make it better. But I was using it, and it really made a huge difference in my process. So I was using everything that you mentioned that's accessible to everybody else, but I realized that I want to know exactly which documents are looked at, which ones are included, and I didn't want to have to go and download all the new filings that come up and all the transcripts and everything else. So Tenzing consolidates all of it. It has already built out prompts that get you started. I think for a lot of people, that's an amazing head start. Your book is an amazing head start for a lot of folks. And then you can interact with the content that's already there and any content you want to add the way you want. So you can ask questions about any aspect that you want, and it will tell you that, for example, you ran into a wall. It doesn't have the annual report from a particular year, but it says if you add it, I can work with it. So it's almost like a superpower and a hired analyst that has an unlimited patience with me. And there was something that I've been bringing up a few times in a few interviews about Colgate, no recommendation of any kind, but I have a memory of Colgate having $1 billion write-off of their Venezuelan operations. We're talking about risk, whatever context was. And I was thinking, I have to fact check myself because I'm repeating that number and I'm not 100% sure. It's been a while. And I pulled 3 years worth of filings from that period, 13, 14, 15, 16, I think, maybe 4 years. And I had Tenzing analyze it, and it found all the footnotes and quotes to add it all up to over $1 billion in a total loss due to the Venezuelan operations. Some of the audience might know that Venezuela is not a business-friendly place these days, so whatever Colgate had in Venezuela had to be written off at that point. Anyways, one example where on one hand you can have this in-depth research about a stock, but also can do meticulous fact-checking. If I asked a junior analyst to do it for me on a Friday afternoon, which is usually when those questions come to my mind, they would probably not like me for it. I want to ask you about something you brought up. You decided to share those prompts with the public. And I see them on LinkedIn. Now there's the book that people will look up after listening to this episode. On one hand, it makes me think this is such a new territory. Wouldn't you want to keep it all behind closed door and don't tell? Maybe just tell me about it.
Yeah, it's funny. I remember I wrote my owner's manual. So those of you who listened to the last conversation that you and I had have, my note, I have an owner's manual where I kind of outline my investment process in great depth. And when I did that, my mother was, I'm again 46, but to your mother, you're always, her little child, right? And she's like, don't do this. You're going to give away all your secrets. And I'm like, I don't think my secret is in, the details of the process. I think that the secret is, the advantage I think is in a disciplined execution combined with a good process, those two things. And I think so let's talk about prompts, right? I think, first of all, like when I wrote the AI equity analyst, part of the reason it took so many hours is I sat there and I created different versions of prompts, some myself, some, by the way, here's a cool little tip if you're new to this, is you can actually have an AI engine, say Claude, help you develop the prompt. You can give it a starter prompt and basically give it a meta prompt, meaning like, hey, I'm trying to create a prompt for Gemini 2.5 Pro with deep research enabled. This is what I want the prompt to do. Make me a prompt, right? So you can actually do that. So there's all you can, and by the way, it'll spit out this super long output that to the kind of naive reader, if you're gonna share it with someone the super long prompt, they're gonna be thinking, wow, this is like such a masterful prompt. It's so structured, everything is so defined. Well, here's the thing: AI is still very poorly understood, and so if you're not testing these things, you are just guessing. And so for every prompt in there, I create 3 versions. I had my own version, just like a human version of a prompt, and I had a Chat GPT version, and I had a Claude version, and I ran each of those 3 in Gemini 2.5 Pro with deep research, but I found so far to be slightly better than other engines. By the way, Google is talking about before year-end, Gemini 3 is coming out. But again, if you're listening to this a year from when this is being taped, there'll be Gemini 17. I don't know. I'm joking, but you get the point. Those things are not important. And by the way, at that point, ChatGPT might be better. The point is, right now, based on my testing, Gemini 2.5 has been the best. So I use it as my engine, and I took those 3 prompts. And sometimes there was not a big difference, and that's why you'll see in the AI Equity Analyst PDF, you're going to have some pretty simple prompts, like 1-paragraph prompts. And it's not because I was lazy and I'm like, just didn't get to improving that prompt. Like, I actually compared it to more complicated prompts, and this prompt gave better output. But other prompts, the extra depth of structure made it better, right? And so I think it takes a long time to test. There's also natural variation. And I haven't explored this fully, but there's something called, and now we're geeking out here, temperature in setting an LLM. And temperature is like, think of it as a creativity dial. So, like, do you want the AI to be like commander data, always the same answer, always consistent? Or do you want it as a function of the same input be, much more creative? And that's kind of an unexplored territory, because I would argue for some investment tasks, you want more creativity. For some, you want more consistency, right? So there's so much to learn. And so I think, to come back to your question, why am I sharing these? I don't think they're the secret sauce. I think it's everything together is a secret sauce. And I think that if you, as the listener, are going to take some of these and start building them into your process, or if they just give you an idea of, given my process, here is a version that's going to work with how I approach investing, and start building that in, you're going to be at such a big advantage, because you're going to be in the habit of using this continuously and growing with the technology as the technology evolves. And if you wait for some end state, first of all, there is no end state.
No.
It's going to keep getting better, although at a slower pace at some point, right? But also, I think you don't want to trust some guy, whether it's me or someone else, to give you some library of prompts. You want to kind of know what you're looking for and what fits you and what doesn't, and kind of evolve with it. And then I think that iteration, is super important. And that's why I think you should absolutely try my prompts out. And some you might find great, some you might find not to your liking. Fine, build on that, and let me know. Now, hey, if you reach out and tell me, hey, there's a better way of doing something, I would love to, if I write the next version, I will definitely include and give credit. So thank you.
No, I think it's the idea of learning in public. I mean, even this podcast is a learning in public. I feel like I get so much more back than whatever I can offer, despite of my experience managing money for 2 decades. I feel like it's a feedback loop, and I continue to learn. Even when I give talks, I tell people, it's just one person's experience. Feel free to poke holes. Right. Let me finish my talk, but feel free to poke holes in what I just said. I will share a little bit of my secret sauce with you and with the audience. What I found helpful, not just with AI, but in general, when anybody's helping with the process, whether it's an intern or a junior analyst, I ask it first, just give me a neutral data set. What happened in the quarter? Give me the growth rates, the margins, change, just neutral. I want to read through that. and I'll make up my mind if this was better or worse than I thought, not what the street thought.
Right.
And then we can play the game of, tell me what you think is good, what do you think is bad, what's getting better, what's getting worse. And both humans are very good at it. And I think AI is getting up there with that question where you can go through, and especially if you ask to compare multiple quarters for this example, so that at first because I think I am so impressionable in that moment that if you tell me this was a bad quarter, it's stuck in my head that it was a bad quarter.
Sure, you're primed behaviorally,
right?
For sure.
Before I make up my mind, or before you help me make up my mind, just tell me exactly what happened, what they said about China or tariffs or whatever, and then let's play the game. Is it better or worse? And I think it just allows me to first have a foundation for my understanding of what happened, and then I can build on that. But that's my little secret sauce. I'm curious.
I love it, and I think it reminds me of a friend of mine and I who shared a few investments over the years. We would play this little game before a quarter. We would say, what would constitute a good result?
Yeah.
In the day before. And the reason is not because we're playing quarterly games. We're not. We're long-term investors, many-year holding period on average. That's not the point. The point is, I think, not to get onto an investing tangent, but information is important because you need to update your thesis and your view based on reality. Because if you just mark everything to model and ignore reality, you might find out that your value range for the business is completely unrealistic based on what's actually happening, right? And that's, I think, a common beginner value investor mistake. You're so taught to be disciplined and stick to your guns, and that you don't change your mind enough as new information comes in. So the point to me of a quarterly earnings report is to say, how much more or less do I believe in my current thesis, and what should my new thesis be if different from the past, right? And most of the time it shouldn't be different, right? It's one quarter, it's 1/4 of a year. It's like not a big deal, but you kind of want to understand those exceptions when you have that signal that something is going differently than you're expecting, and not just in a temporary way, but in a way that impacts the long-term trajectory of the cash flow stream. And that's why I think sometimes I found setting the expectations in advance helps you, not get kind of taken in by management's clever framing of the results. One of my favorites, by the way, is, I don't know if you've heard this. This is our second highest Q2 or Q3 result in history, which is such a clever way of saying our revenues are down or our profits are down, right? It's our second highest Q2 ever, also known as we shrank, right?
I love that idea, and I want to emphasize for people listening that the price reaction after the quarterly results, that's one thing, but actual fundamentals, it's a separate thing. And I could probably take the tickers away, the story away, the CEO away, and give you the same quarter with revenue up 1% and guidance lowered by 1%. And one stock will be up 5% and the other one will be down 20%. And the context is what affects the price and the expectations and everything else. Just look at the numbers first and even ignore the price reaction, because I think the price reaction creates this belief and an impression on us. Wow, this was a really bad quarter. The stock wouldn't be down 20%. I always reminded my interns over the years, if you're a buyer of stocks and they're 20% off and you liked it yesterday, don't you like it a little bit more now if it's cheaper? And something was shifting in their heads. And they would look at the price dropping in a completely different way instead of panicking, maybe thinking, I could own a bit more of it. Speaking of that, you are at the center of value investing and behavioral finance. You write about it. You're fully immersed. Do you think that this new tool somehow allows us to democratize access and maybe remove that meaningful edge on the behavioral side because we're going to trust the machine a bit more?
Not at all. I mean, I know this sounds arrogant, but it's like saying, "Hey, we have this new dietitian came up with an even better new diet." It's like, no, but the problem is not absence of plans; it's absence of discipline to actually execute them. I mean, like if you're listening to this, do this. Okay, I know. Raise your mental hand. Obviously, if you're listening to it at the gym or on a walk, you don't have to raise anything. But like, do you have an investment process? Number one, like that's explicit. Number two is it written down somewhere you can refer to? I think if you've answered yes, to those two questions, you're in the minority. I really believe it. Because I'm not talking about a PowerPoint if you're managing other people's money and you have a pitch deck. That's not it. I'm talking about like an honest process that you actually follow, like systematically, right? And so I think one thing AI is doing is if you don't have one, which I suspect the majority of us, based on my experience, don't have a explicit written down investment process. I think what it's causing you is to rethink that and saying, if I had one, I would have a much easier time building AI into my process. Because again, you can't ask AI, hey, AI, what's going up next year? Or, hey, is Coca-Cola mispriced or not? I mean, you can, but you're going to get terrible answers because it's not built for that, right? You have to remember, like a large language model just follows like a probabilistic chain, right? Of what word is most likely to follow what other prior set of words, right? That's kind of how it thinks. I mean, it's more complicated than that. There's like now neural nets to make them thinking models, but nonetheless, they're not really set up to answer these kind of questions. So you still have the heavy lifting to do. I think where behaviorally you can really benefit is if you take a check, let's say confirmation bias. So what does confirmation bias mean? It means that you look for evidence that agrees with what you already believe, and you disregard or choose not to seek out evidence that disagrees, right? Pretty straightforward. Everybody does it except for me. I'm joking, yeah, right? Everybody does it. That's the whole point. So, devil's advocate, perfect example of systematically building in a step now that's in a time efficient way to fight confirmation bias, right? And you can go through it in a whole bunch of them, availability bias, recency, but there's a gazillion behavioral biases, like literally. And I think that you can now build in kind of checklists or steps in your process that don't feel like pulling teeth, and you have to like spend, I don't know, 100 more hours on your research process per company. So I think you have now a very low cost to doing it better rather than what you had before. And the question is, will you take those steps? In practice, most people will not. I'm almost sure of it. They just won't. It's too hard, even with the reduced friction, to do this in a disciplined way. It's much more fun to pontificate as an armchair philosopher, as I call it, about the future of AI, or whether Amazon is an amazing business, or compounder this, compounder that. That's easy. It's fun. It makes you seem sophisticated in certain circles, but it's also lazy. And most people are not going to succeed as armchair philosophers. Now, probably a small handful will, but the problem is it's a very small fraction, and then you will probably hear them, self-promote how they, just had this brilliant qualitative insight, did no research, had no spreadsheets, blah, 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 and they got the one stock right, and it's 100 bagger. Well, good for them, but is it replicable? Can you do the same thing? I don't think so. Not in that way. That's why I'm a big fan of process, and I think process builds repeatable habit. And AI is the perfect companion for someone who wants a repeatable, rigorous process.
And process is the only thing we have true control over.
Yeah.
You and I will sit down, have a process, but we have no idea about the outcomes. It's even hard to give a range of what kind of returns this process will deliver, if you're absolutely honest about it. But in my mind, what I'm trying to do is own businesses of a certain quality, bought at a price that makes sense, and holding them over a long period of time until it actually matters.
Yeah.
I'll come back to this, but I want to ask you about the elephant in the room, which is the hallucination problem, especially when you use some prompts that pull information from a wider range than what you already uploaded. And I mean, I'll tell you a quick anecdote. I was traveling, I was in Chile, and there was a beautiful house that somebody built 100 years ago, and there was just the name of the lady that used to live there. So I pulled up my phone and I wanted to look up who she is. And whichever tool I was using told me that she had 2 kids and married this man. And I thought, oh, interesting. And then I actually got a brochure in Spanish, and I'm reading this. She never had kids. And and she married somebody, but not the person that the AI told me. And I thought, wow, it's such a low cost, low risk question. So I didn't care. I laughed about it. But I thought, and it had some sources as well. But the sources I didn't have a minute to look up. So a couple of questions here. You're putting a lot of inputs in. You're getting an output. Obviously, you get the sources. do you really have the ability to go through all the citations and check what's in them? Because just because, it's like a student that's overeager will give you 10 sources, but none of them actually talk about what they said. The lady didn't have any kids. I think that's, end of the story here.
Yeah, no, absolutely. I think there was some big four consulting company that got fined by some Australian government or something like that, New Zealand government, for making stuff up in their like $100,000 report with making up sources or something like that. So if you download the AI Equity Analyst, the PDF, you'll see that as you go down funnel, I use AI less and less. At least I rely on AI, and there's more and more human. I literally have that flow chart of the process with human plus AI versus human only, or sorry, AI, human plus AI, and human only. And I think as you get closer to the bottom, to nuanced judgment, to decisions, it has to be human. So I like to think of like you can use AI to go deep, but you still have to be willing to go deeper yourself. So example of where hallucination would not be a problem is what we talked about, idea generation. If it says, I don't know, pick some garbage company that never made a profit and says this is a Phil Fisher style compounder. Well, that's okay, because you will quickly see, if you know what you're doing, you know how to pull up a company quickly with the help of AI or without, this is not it. So you just accept that was a mistake, no big deal, right? The biggest probably error AI can cause you to use if you use it properly is like you falsely pass on something. Let's say it creates this devil's advocate argument that's just completely bogus and it says these guys are like, I don't know, just terrible, all of these things, and they were accused of fraud, and you're like, oh, I don't want to deal with this, and you pass, and this was complete lie, hallucination. Okay, that could cause a mistake of omission, but that's not a big deal in the grand scheme of things, or looking at hundreds and hundreds of ideas. I think that, I do click through the sources sporadically. I do not click through to every source. That a one-to-one roadmap is not very useful. Like it's like I'm trying to save time, so I cannot check every single source that it said what it said, and still save the kind of time I want to save. I think you just accept that you're going to have to falsely pass on some, hopefully small fraction of candidates, but I think that is more than made up by how many more candidates you can consider, right? That equation I gave you, right, in the beginning, the formula of quantity of ideas you look at times quality of your assessment of each idea times how well you make judgment based on the output, right? And I think the framework I like to think of is you use AI to go deep, but you as the human go deeper, right? And bring it back to kind of, the warning we started this conversation with is in my PDF, which is, if you're looking for shortcuts and kind of a off-the-shelf, package systems where, like, hey, AI is going to pick stocks for you. It's going to do this amazing analysis. All you have to do is type in the order in your brokerage account. It just doesn't work that way. Which, by the way, there's so many scams out there. I think people are like free riding on this popularity of AI and selling you things. That's why the PDF is free. It's not an attempt to make a quick buck with some kind of, although I'm sure I could charge for it too. I spent a lot of time on it. But I think that, you want to be thoughtful and you want to customize and you want to be the final decision maker, in which case the hallucinations are a nuisance. But if you're not being lazy, which those, big four consultant company people were, when they just verbatim cut and paste, the AI generated stuff into their report, if you're actually thinking through and then going deeper, I think you can solve that problem.
To me, at the end of the day, investing it is about finding an idea. It's about doing the research, but it's really about maintaining the conviction to hold ideas.
Yes.
And to me, especially the new purchases, usually they go lower before they go higher. And I think it's
unfortunately same for me. I wish it weren't the case, but it's true.
Maybe because it's my preference. I call myself a value buyer, but I'm a growth holder. I can hold things a long time. I bought stocks that were out of people's minds and people were not paying attention to them. Now they're in the headlines. They're still in my portfolio. It doesn't really change much for me, but having the conviction, and if AI can help you and give you some conviction on that front because you did more research, you asked better questions, I'm all for it. I want to ask you about the other end of the spectrum, which is real trouble. And you bring up Howard Schillitz's book, which came out early in my career, the first half of my career, and people were fascinated with financial shenanigans, we had a lot of shenanigans going all around, and Enron was still, a lot of people remembered Enron. You use AI also to find red flags and trouble, which is the other end of the spectrum where you don't want to go.
Yeah, no. So first of all, it's a great little prompt. It's just basically because Howard Schiller, as you just said, wrote this great book, Financial Shenanigans. I think it's the fourth edition now, which you can actually listen to if you want. I did re-listen to it on Audible recently. I recommended it to my students as well because when we study security analysis, I always tell them, hey, part 5 of security analysis is great, but it's outdated. And if you really want to dig in, Howard Schiller's book is a good place to get smarter about this topic. But let's be honest, look, I'm a CFA charter holder. I have 25 years of experience professionally, but I don't know everything about accounting there is to know. Now, so you can run this prompt and you can basically have it highlight red flags and investigate. And if it's really worthwhile, you can hire a forensic accounting firm. Although I would argue if there's red flags that are legitimate, you might not want to just proceed further. But a quick story. I mean, if you actually go to my Substack, Behavioral Value Investor, the article that's pinned to the top is when I was a young analyst at Fidelity and I found an actual fraud. It was this company, OM Group, and you can read about it there. But it's I ended up confronting the CFO in the boardroom, and I was really nervous. I was like 98% sure I was right, but for a young analyst, I was worried I was going to get fired if if it turned out I was wrong. I will let you read and find out how it went. But the point is that was reading the footnotes, and it's noticing patterns, relationship between the balance sheet statement over time and the income statement over time. And you know what? What if I missed it, right? By the way, I was sitting in the room. I was 21 or 22 at the time with all these, big firm analysts, T. Rowe Price, whatever, who were MBAs from fancy places. They were 35 to 45 years old, whatever, much more experience. They owned the stock they didn't know, right? Doesn't make them bad people, right? They were just all human. We fall for management narrative. We want to believe, blah, blah, blah. And so I think having that step, even if it highlights something 1 out of 20 times, it can save you a lot of trouble.
I agree, and it's such a powerful revelation because when I look at the investment universe, it's a lot of things I will never own, a lot of things I will never feel comfortable owning, and then a smaller and smaller universe somewhere in the middle, once you peel it all away, that I would consider. And in that universe, if I can spend more time on more stocks and look deeper with whichever tools are available, I think that's great. In my mind, you started at Fidelity. I was at a smaller firm, but we had 100 some people at some point, and we had dedicated analysts turning rocks day in and day out. You and I don't have many, I don't have any analysts working for me. I don't think you have an analyst working for you.
Correct. Yeah, I don't.
So I think we're in an interesting position. I know a lot of listeners are too, managing their own money or money for other people, where we don't have the hired 20 group brain power that can go and turn the rocks for us.
But I'm going to just add, even if we did, having this step would either save them a lot of time,
100%,
or you could potentially, and this would be interesting to compare, you can actually get a better result. Although I was actually at Value X Vail, where my friend Vitaly hosts a value investing conference once a year, and there was a talk given about forensic accounting where his theory is you don't want to use AI for that. So there are multiple point of view. His idea is as a forensic accountant himself, he wants to talk to former employees or current employees. He said the employees always know when there's fraud. Someone always knows. And yeah, the point is that I think you have different approaches, but I think you and I are not forensic accountants. And since, again, going back to the multiple choice framework in the analogy, you just pass. You don't need the agita. No, the forensic accountant who's hired by the board or by someone needs to have the answer. The beauty is you and I don't. If it looks tough enough, Warren Buffett's famous, or Charlie Munger's famous too tough pile is where that idea goes, and you move on with your life.
That's why I pointed out there's a difference between me saying I'm not interested in the idea and me saying I will short this stock. I never shorted a single stock in my life, so there's a lesson there, I think.
Good for you. I mean, a few years ago, I tried buying put options, and that has been a humbling and impoverishing experience that I will never do again. Because despite being mostly right, and some of these stocks have being down 95% since then, my outcomes have been mostly bad for the
Yeah.
reason I'm sure you and listeners can
Timing.
guess is timing, right?
Timing.
Timing is
Yeah.
hard. So don't do
But
it.
just
Unless you're like in a in a very small group of like professionals who know what they're doing.
of
If you
course.
want to dabble in it, don't. Save yourself the trouble.
When I think about it, you do this an immense amount of research, you find a stock, and then you hold that stock for a decade. It's going to make money for you. If you short, for me, emotionally, psychologically, intellectually, it's not a good equation, because even if I'm right, worst case, it goes to zero. I technically could double my money, but other than that, it's just not enough for me. And obviously, the risk is unlimited, because even the worst ideas can fly to the moon, and we've seen it. And I don't want to be on the other side of the equation. I want to
Well,
bring up,
I think, maybe this is a kind of a good place to bring it all together, which is
yeah,
I agree with you. However, again, I always tell my students, I would tell you guys as the listeners, look, you don't have to do it the way Bogomila or I to do it. There are many
absolutely.
ways to do it. And, in the current news, you have Michael Burry shorting all these tech stocks. And this morning I saw someone post that he posted this depreciation analysis. All these tech companies are vastly overstating their earnings because they're increasing the depreciable life of the tech of their capex investments. And he has a table where over the last 5 years, like they've added years and years of useful life, which of course serves to lower depreciation, which then serves to increase profits. So there are people who enjoy that kind of stuff and
Of
the
course.
thrill of the kill. But if you want to convince yourself not to do it, just read "Fooling Some People All of the Time," and by David Einhorn.
Mm-hmm.
And no, he still kept shorting after that. I don't know why, but the book, I mean, to me, the book's point was it's super hard. And
Mm-hmm.
when you encounter managements who are either outright frauds or just slightly fraudulent, if that's a thing, they have such a huge vested interest in continuing to pump their stock, and they're fighting there for you're just trying to make a quick buck. They're fighting for their life.
Yeah.
Because if they're proven to be dishonest, that's it. This is it, right?
Mm-hmm.
They might be in jail. So it's a huge asymmetry of how much is at stake. And again, unless you're really prepared for that life and that's your thing, I would caution. Caution.
And it's an important point. What works for me or for you, Gary, may not work for anybody in this audience. And everybody has to find their own way of doing. This is just an opinion, as we started this conversation,
Yeah,
of two guys that have been doing it for a while, but it's just an opinion, and you guys do your own
exactly.
research. I'll mention one or two things that I don't want to drop or lose here. There's a point when you have to stop turning rocks, for me at least, both on the if I wanted to buy it or if I would never buy it. And I think there's a certain point where I met people that interacted with Enron, and they asked enough questions to know that they just don't know what's going on over there, and they walked away. And that stayed with me, because there's a point that I come across an idea, and I realize no matter how many more rocks I'll turn, I'll never get comfortable owning it, and that's enough for me. I don't have to spend 5 months trying to convince myself it's not a good idea. And then on the upside, I think there's a certain point where you feel like I will never know 100%, but I know enough to buy it, and then I know enough to keep on holding it. And I think AI can be a trap, because it's so alluring to keep on turning rocks and not actually acting on your ideas. I'll leave it at that. One last thought. Any investment case, for me personally, might not apply to everybody. I want it to fit on one page. I can have a lot of supporting documents, but the actual investment case, I want it to be on a page or half a page, explaining why this could make sense. And I think AI gives this ability very easily these days to produce, a 5,000-page report. And I think that's also a scary place to be, because at some point you have to boil it down and find a way to convince yourself, not me or Gary, but yourself, that you're going to hold it. I'll leave it at that. Gary, any last thoughts?
No, I mean, just very quickly on your last point, I just came across a 1951 article by Warren Buffett
Yeah.
called "The Security I Like Best" about Geico.
Yes.
It was one page,
Yes.
super simple. I actually just posted it a few days ago on my LinkedIn profile.
Yeah.
And I mean, that's just so masterful, right? He makes 3 or 4 points, substantiates them quickly, and it's a no-brainer, right? And I know there's a benefit of hindsight, and I know we know Buffett is amazing, all of that. But if you just were to read it without any attribution, like such an incisive, quick analysis that just cuts to the jugular, goes for the what's important and is going to matter over the long term and disregards everything else. And having mentored a lot of analysts over the years, that's a skill. I mean, that's both a talent in some ways, but it's also something you can nurture. And I think I completely agree with you. Don't fall for AI generating a encyclopedic report on a stock as making you think you've done the work. Doing the work means you have followed your process and you are now ready to make an informed decision, whether it's with the help of AI or not. So don't equate length with quality. Quality is quality. I'll end it there.
Gary, what a wonderful conversation for everybody. Look up AI Equity Analyst. The link will be in the notes. It's free, 34 pages of hundreds of hours of work that you put into this, and it's an amazing head start. And share your feedback with Gary to allow him to do a better job with AI. Gary, thank you so much for today. What a pleasure.
Likewise. Thank you so much for having me.
Before we wrap up, a quick reminder, if you want to supercharge your investment research like I have, check out Tenzing Memo. Don't forget to use code BILLIONS at sign up for your extended trial and 10% discount. It's been a game changer for my process, and I think you'll find the same. Thanks for listening to Talking Billions, and I'll see you next time. You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.